Hello, you trader nerds. How are y'all? Look at what we got going on today. Real traders never trade alone. They trade with their fellow nerds. So good to have you here. We got us a down day, 0.67. Down. Rough, rough, rough. 0.68. Down. AD down. VIX spiking his head to 1487, which means we're losing money because the VIX is popping its evil little head up. Look at this, y'all. We're back at the cash open after coming off the Globex session. We're back into the 15-minute opening range. It looks like AD is going down and price is going with it. Will the overnight low be a support level? We shall see. But interesting, and we've got about average volume. Let's look at the big green monster. Big green monster, not on NVIDIA, but on volume profile. Here we go. So no surprise, we go down to the very bottom of the fair value zone, right? You would think that we'll probably find a little bit of support here and pull back up, but we just don't know. If we don't, we'll go into an oversold territory. But right now, we are fairly priced, ladies and gentlemen, in testing some of these things. And remember, yesterday we said, yeah, we'll probably test some of these little pockets here. Well, what do? We have tested some of those little pockets. It's just the way it goes. Nothing really to glean from the linear regression channel. Looks like we're going back down to the center of the linear regression channel, but still bullish, right? Still bullish overall. And let's see, on the down move, what's happening to volume? Volume is picking up on the down move, so could go a little bit farther, I suppose. So everything looks really, really good. Now, yesterday, you saw me put in a black swan hedge. And if you'll recall, the rules of the black swan hedge is you're supposed to start another tranche if you get a move of 0.4% or down. So what we need to do, ladies and gentlemen, is finish the hedge out. So yesterday, let me just show you what we did yesterday. In the Roth IRA, we sold 12 and bought 20, right? Sold 12, bought 20. So what we need to do now is go, hey, man, we are net long 8 here. So what we're going to do, bought some NVIDIA. What we're going to do is we're going to go in and we're going to now sell another 3, which will give us 15 shorts and 20 longs. Okay. Because we got a big move down. So let's look at that and let's see how we're going to do it. We'll go to our little thingamajiggy here, and we'll probably go out to about, 90 days or so. Yeah, we've got our hedge yesterday in the 121 days. Let's go to about 90 days, and let's see what we can sell for $3. $3. Here we go. So the 3,100. So we'll try to sell that at 310, and we'll sell 3 of those. Wrong count. Bobby Beth 2030. Here we go. Bobby Beth 2030. So we'll try to sell 3 of those. Little bit of buying power. So let's try to do that. Nothing. Not a thing. Come on, baby. Feel me. Feel me. Unless you've got a restraining order, then don't touch me. All right. So here we go. 305 and in, baby. There we go. So we got our 305s in. So at 93, we did the 3,100. All right. So what's this? This is going to be cool. So we go 3,100 for 305, right? Where's my spreadsheet? There we go. No, that's not it. Where's the other spreadsheet? Roth IRA. Here we go. So we said it was, 93 days. So we did ES. Y'all correct me if I miss anything here. We did 3 contracts, and we'll call this BSH2 because we're starting a second tranche, and we did the 3,100s. Oh, AMD. Wow. Puts. And then this is a short hedge. And what was the days on that one? The days expression was 93, and we did the 3,100. 93, 3,100. No, it's not that one. Come here. 93 days. And we did it 3,100 for 305, right? So now we got to figure out how much we got to buy the loans for. So we did this on 1/17/24. Nice day to extend the hedge. So now we're going to go, okay, what we need to do now is we need to buy 5 underneath that, right? So that's going to be interesting. So what we'll do is we'll say, okay, we need to buy the 30/50s, right? How much can we buy them for? So I have got you under the realized returns tab, no, under the SPH break even tab. I've got this nice little thingy majiggy here that kind of shows us, okay, we did one tranche, right? So that's -3. The price of the shorts was 305. That's what we sold them for, right? What should the price of the loans be if we harvest at 20 cents to make this an overall even trade? So what you do is you hit the solver button and it goes, da da. If we can buy our loans for $1.63, we will have a trade that will break even. Isn't that cool? So what we'll do then is go back and we'll say, let's put a GTC order to buy the 30/50s. And we want to buy 5 of them. Or what I say, $1.62. So let's put them in at $1.60 so that this trade will be put on for a overall credit. GTC, 5 of those 30/50s, and confirm it's in and send. Beautiful. Now at the same time, you want to create a closing order on these. Now I don't like having too many pieces of the puzzle moving, but these 3 that we said, we want to move those down and we want to harvest those at 20 cents, right? And we'll say GTC on that. Confirm and send and send. Isn't that cool? So you got all these little orders that are running this little campaign for you. So let's go through it again, right? The Sweet Bobby Hedge, just to piss him off. All right, so here we go. Sweet Bobby Hedge. The way you start it is you buy 4 complete tranches. Now, I don't know what your tranche size is, but if you're buying 4 complete tranches, I've been using, that means you're going to sell 12 at about 120 DTE, and then you buy 20 that are below it. Yeah, the Sweet Bobby Hedge, Bobby Sweet Hedge. Yeah, that's right. I like that too, Bob. Right? Both at 120 days. So you sell these for about $3, and then you're going to have to buy these for whatever you got to buy it for, right? So it's probably going to be, $295, $290, something like that. So you buy those. It's going to cost you about $1,000 debit to get your tranche started. Now, if you've got a $5,000 account, that's over hedging. If you've got a $10,000 account, that's over hedging. 20, I could see doing this. A $25,000 account, yeah, that's good. That's good, right? So then what do you do? So now you've got these 12 and 20 tranches on, right? That's 4 complete tranches. And it looks good, y'all. Oh my gosh, does it look good? Let's go to the Crimson account, or this account here, and let's just look at our ES positions. Let's go to Analyze. So now it doesn't look so good because I've got those 3, but let's hide simulations. Let's do single symbol. Got to just look at our ES positions, y'all. Oh my God, isn't that not beautiful? Now still, look at this. Let me move that to 117. Now, before we sold the 3 today, that's what we had. Look at this, y'all. Look at these numbers over here. If the world breaks loose, we're going to make between 65,000 and 88,000 on a crash. We reduce that when we sell the 3, but look, y'all, we've still got a wonderful hedge, 35,000, 49,000. Y'all see how cool this is? You still got an awesome hedge to the downside, even with that short 3 that we sold there. So that's what your hedge looks like, y'all. Follow that yellow line with volatility popping up to 44 to 54%. You're going to be up 35 to 41,000. So you see how even with me selling 3, man, I am good to go. And then you put all those little GTC orders in there. So then once you get your tranches in, once you get all those tranches in, then you wait on 2 consecutive red days, 2 consecutive red days, or 1 red day of 0.4% or greater. where the market goes down 0.4% or more. That's today, y'all. Didn't we just say the market was down 0.68%? Great day to sell additional puts. Yeah, but Bobby, what if it goes down? Keeps going down. Well, it does, y'all. What if it crashes? You don't care because you've got more longs than put than shorts. So then on a good down day, you sell a -3. All the while, you use your BSH calculator or Sweet Bobby Hedge calculator to figure out what you can do to a GTC order to buy 5. Isn't that sweet? Now, then you also harvest these at 20%. And I put GTC orders on those. GTC. So you got these little GTC orders running. Now watch this. Immediately, when I get in the middle of the night at 4:30 in the morning, because that's when traders for these things normally hit, when this trade executes and I buy my 5, you know what I'm immediately going to do? I'm immediately going to go out and sell another 3. Microsoft. All the orders are filling. I'm going to go out and I'm going to sell another 3. Okay? Immediately. Now, you can wait until another red day if you don't do it. But you know what? I just want to keep building these things. I want to keep building these things. And your spreadsheet that I've given you does a really good job, y'all, of keeping up with how many shorts and how many. Look, I've got short hedges, 15. I've got long hedges, 20. 15 to 20. What does 15 to 20 look like? It looks like that. Waka. Isn't that great? Where you just make money, and then look at this, man. If we just crash, crash, baby, crash. So do you see how weaving this in is a great little thing? Now, I got to tell you, it's easier if you want to just to go out and buy 2 puts and not deal with the headache of trying to get them on for free. If that's your game, you could say, I'm going to spend 3% of my portfolio, or as we found the other day, Raging Bull, he's spending up to 12% of his portfolio, I think, per year in order to hedge and buy the hedge. That's fine too. However you want to get it on there. But here's why I think I've stopped doing these before. I stopped doing them because it can get complicated. It can get complicated. If you don't have my spreadsheet to kind of keep up with all this stuff, it is complicated. It's complicated because really, you look over here and I've got the spreadsheet now. It's so smart that it colors the shorts and colors the longs. What's this? See how it colors them? You got shorts. That's something. I don't know why it colored that. You got shorts and then you got longs. Then you got shorts and you ought to be looking for another long. If you don't see it on your page, that means what? It has not filled. But that's the great thing is that then we wait. Normally, we can get into these trades so that the hedge that we have on is absolutely free. Do you understand that? It's the chance of getting it on free. And you say, well, Bobby, what if we can't get it on for free? What if the market keeps going down against you? I got it. It's a problem. There may be a time you have to pay extra for your hedge, cost of doing business. But most times I'm able to get into that hedge for absolutely positively free. Isn't that great? Okay. So that's the hedge. It's a great day that we saw. We put the hedge on yesterday. You see a day when the market is down significantly. Not significantly, but it's down 0.75%. Oh my gosh, I should have waited. I should have waited before I put it on. No, go ahead and put it on. And then GTC orders are running. Now, keep in mind also that having too many GTC orders can mess with your buying power. It really can. So you got to kind of make sure that you don't, I got all these working orders now. So you got to kind of keep an eye on it. And it's kind of every day you need to just kind of look, okay, is it getting close? That one's not. That one, that one, no, nowhere near. And you just got to kind of keep an eye on it. Got to keep an eye on it. Okay? All right, great session today. That is the second part of the Sweet Bobby Hedge. I hope y'all have a wonderful day. I will see y'all tomorrow.